Video surfing the Elliott waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I'll look at the Euro, Crude oil, CAD yen, Dollar yen, S&P 500 and Aussie versus Kiwi. Now Euro dollar, which is here, is coming to the upside, but still looking at the price action, I think that we could be slowing down here, just trapped in a higher degree correction, especially if we consider that that was a pretty impressive move up from September lows. So in my opinion, this correction could take longer to unfold. So I'm tracking wave B, but even this wave B could potentially retest these highs from earlier this year. So in the short term, I think that there is room for some of the more weakness here. We are currently at the 61.8% of this wave C. So it's the actual fib level taken from wave A. So I'm seeing limited upside here in, let's say, in the next few days. Keep in mind that euro dollar has seen pretty impressive recovery here over the last 2 weeks, and also we are approaching jobs data and Easter holidays, so maybe there will be some position adjustment ahead of the holidays, and this could potentially cause a new reversal. So I still think that maybe we will see a limited upside, but of course there is a chance for a spike up to 1.1034 before market turns down for a higher degree wave C. If from any reason we will see just straight move to the upside, and let's say that we close somewhere above or around 1.12, then I think that we will have to go with this wave count, which shows that we are in the middle of wave 3 later on. Okay, so we have 2 wave counts on the radar screen for now. At least in the short term, I think that we could retest these highs, but regarding the midterm picture, it's a bit, or maybe even to long-term picture, it's a bit too soon to say that this wave 2 has ended here. Now let's take a look on crude oil. Now crude oil has seen a very nice reversal to the upside. Now if you were following our analysis, then you know that we've been tracking this 5-wave drop for a while. We specifically tracked wave 4 triangle very closely and predicted this wave 5 to the downside. Now when a lot of media has turned aggressively bearish on crude oil when this one broke down, well, obviously we know that when crude becomes extremely pessimistic, we have to be very careful because the market moves in sentiment. So if something is overcrowded, the opposite may occur, and this is exactly what is happening. The OPEC has stepped in. They announced cuts in a few months, so obviously this means that they expect that demand will drop because of potential bank crisis and higher rates. Of course, the economic activity could slow down, so if demand will drop, what they want to do is to stabilize the prices, because after all, keep in mind that this was pretty big pullback here from that 2022 highs. It was around 50% drop, so surely they want to make sure that we will not see prices falling even more. So in my opinion, they want to stabilize the prices, and this so far looks like we can be in a first wave A of a higher degree 3-wave correction, so maybe even $90 could be seen by the end of the year. For now we have, however, this open gap here, so keep in mind that the first wave A should be made by 5 waves. And now if we look closely here, this is potentially wave 3 underway, so watch out for wave 4 pullback and more upside. Also, this breakaway gap usually occurs within the impulsive sequence, but once the wave 4 is finished, potentially here could happen around this 82 resistance, 83 resistance area, and after that be aware of this wave 4, which could also fill the gap. Now these gaps may not stay open for a long time. I think that this could act as a magnet, and when they are filled, ideally for a wave 4, that's when we could expect a new resumption higher. So yes, I'm bullish on crude oil. I'm expecting more upside, but if you want to play on the long side, I think it can be better to wait on this pullback, on these gaps to be filled. Also, if the crude oil is really going to see more upside, then maybe CAD could benefit from that move. Looking at the daily chart, keep in mind that the CAD yen has completed this 5-wave draw. We've been tracking this one very closely as well, and so far notice what happened here. We have seen only a spike to a new low and then a sharp reversal, and usually when that's the case, it means that potentially there was a failure breakdown, so it's not a surprise that market now stepped into a corrective phase. Now again, always when you have these 5 waves down, what you would expect when market makes a corrective movement, that this recovery will be made by 3 waves, and so far you can see only one leg to the upside. So I think that's a wave A, meaning watch out for more gains after this wave B pullback. Looking at the 4-hour chart, we have very nice clear impulsive recovery here from that lows, also that came out of a wedge pattern and ending diagonal, which by the way is a reversal pattern and normally will cause a very strong move. So it's not a surprise to see such a strong recovery, but this recovery is not finished yet. I think that it can take us even higher, as I said, maybe even back to former wave 4 around 129 area after this wave B dip. Now wave B supports could be seen around 95 to 96.50. Okay, there you have the 50 and 61.8% retracement. So after these minor 3 subwaves down, I think that again we could be in stage for a new recovery here. Now let's take a look also on dollar yen. Dollar yen is coming to the downside, now stabilizing a little bit around the 130 area. It was the key support here for a few times when you look back from May of 2022. So this could be a pivot level for now, so watch out for potential more near-term strength as long as we are above that level. Also keep in mind that later this month, however, we could see some volatility on Japanese yen because Bank of Japan will have a new governor, and maybe this will be speculation that that policy will change, and of course any change in the policy, especially in the yield curve control, could potentially send dollar yen even lower. But for now it looks like that there is room for more upside, at least in the near term, because we are tracking this counter trend rally here after 5 waves down for a leading diagonal. Now you have seen wave A potentially is trying to stabilize for a wave B, so ideal resistance for a next sell-off would be around 135.10. So that's the key resistance from where I would be expecting a resumption lower. But for now it looks like that this correction is still ongoing. Now let's take a look also on the S&P 500. Now on the S&P 500 we are tracking here a triangle, and looks like that this wave D could potentially be very close to this resistance. Again, we have the US jobs data later this week and ahead of the holidays, especially after this very impressive move here on stocks, you could see some profit taking, profit adjustments. So in my opinion, this could cause a pullbacks. Looking at the triangles here in Elliott wave terms, well, that's an A, B, C, D, E pattern with 2 contracting trend lines, and if you look closely here, wave E is still missing. So after this wave E, right, after this pullback, we would continue to look to the upside, potentially even back towards these August 2022 highs. So support, of course, could be first around 4,000 level, the pivot level of this triangle, or even better at the lower side of this range. So watch out for S&P 500 to pull back a little bit here, especially also because we have VIX, known as fear index. And since the start of 2022, when VIX was trading here at these lows, we always have seen a top on the S&P 500. So that was here at the start of 2022. Then we had also the same scenario here in April of 2022, exactly a year back. Then again in that was in August of 2022. Then you have seen a top formation here back at the end of 2022. This was then in February of this year, and now again we are here in April. So clearly I think it's maybe markets are a little bit too confident regarding the potential further rise, because there is speculation that Fed will stop the hiking rates, but then you have on the other hand this credit tightening conditions, which still means that there could be economic slowdown, and this could potentially cause a pullback for a wave E here. So watch out for potential some volatility to pick up, and normally that's the case when you have stocks market coming to the downside. So be very careful here, but overall I still think that this is consolidation and that at some point we will see further upside here on the S&P 500. And now let's take a look on Aussie versus Kiwi. Why I'm bringing on this one? Because we have the Bank of Australia rate decision 2 days back. They were on hold, but today you had a surprise from the Bank of New Zealand, who raised the rates by 50 basis points. So this makes a perfect cross for a sell on Aussie New Zealand dollar. We are seeing a very nice reversal to the downside. It's not a surprise actually in Elliott wave terms. We've been tracking this counter trend movement a few months back after identifying this 5-wave drop first from 2022 highs. So I think that this downtrend is now in play and ready to resume even lower. I'm looking for 104.60, potentially even lower prices until we see this wave C structured by 5 subwaves. Okay, so Aussie versus Kiwi, it appears like a very nice volatile pair at the moment. Also, if the stock market would really come to the downside, then maybe if you're looking for some trades for some dollar longs versus commodity currencies, then maybe Aussie dollar shorts could work better than New Zealand versus US dollar shorts. Okay, on the opposite side of this, if the stock market, let's say, that would break towards August 2022 highs, as I showed you on the S&P 500 chart earlier, then obviously in the risk on mode, Kiwi could be much better than Aussie. Okay, traders, thank you very much for your attention. Hope that you enjoyed this video and talk to you soon.